Good afternoon, everybody from a snowy Montreal, and welcome to PBA at Noon. I'm Paul Benwell, and I'm joined by my colleague, Sophie Caesar. Today, we have with us 4Front Ventures. They trade on the CSE under the symbol of FFNT. 4Front is a national multi-state cannabis operator and retailer with a market advantage in mass-produced, low-cost quality branded cannabis products. 4Front manufactures and distributes a portfolio of over 25 cannabis brands distributed through retail outlets and their chain of strategically positioned mission-branded dispensaries. Headquartered in Phoenix, Arizona, 4Front has operations in Illinois, Massachusetts, California, Michigan, and Washington State. And they recently announced that their state-of-the-art 185,000 square foot production facility in Commerce, California is nearing completion. Today we have with us Andrew Toot, 4Front's Chief Investment Officer. Good day to you, Andrew, and you can start whenever you wish, and we'll have questions for you later.
Good afternoon, Paul, and thank you for having me. Pleasure to be here. As Paul said, I'm Andrew Toot. I am the Chief Investment Officer of 4Front Ventures. 4Front is a multi-state cannabis operator here in the U.S. With operations across 5 different states into large, nascent recreational markets. Let's start off with a very quick backdrop of the cannabis industry. You know, up in Canada, medical marijuana was legalized 7+ years ago, and there was a frenzy for investors to start to get into the cannabis space. And I would say that while we here south of the border in the U.S., we've been a little bit glacial in our movement, but I would say that we're on the cusp of a very similar trend here in a market that's about 8 or 9 times the size of the Canadian market. Currently, we have bipartisan support here in the U.S., and I think that we're at a very interesting time in this market with President-elect Biden and Kamala Harris coming into the White House. I think that we could have, it could be an incredibly good time to start to look at these cannabis names.
I'm sorry, Andrew, we can't see your screen. If you'd mind sharing that with us, that'd be great.
Oh, I'm sorry. You can't see it, Sophie?
No, but you could try just going to share screen again at the bottom and sharing it.
Not seeing that.
Maybe press escape and then start over.
Share screen. There we go. Does that work?
That's perfect. Thanks so much.
Okay. My apologies. There we go. So our mission is to produce, we think that here at 4Front, we think that we are a preeminent name in cannabis, maybe one that you haven't heard of before. And because our mission is to produce low-cost products and give customers a great quality product at a low price, we think that we can take outsized market share because we have figured out how to produce these products at a very low cost and be able to provide a value and a great value proposition to consumers, which allows us to take outsized market share. And we believe that we're in a really interesting time in the market here in the US. In the very early stages of the market, folks were really focused on how many states you are in. And we think that, you know, that land grab part of the market expansion is largely over. And now investors are more focused on who can actually operate these businesses and produce revenue growth and profits. And we think that our company is very uniquely positioned to take advantage of this environment. So our business overview is really simple. We started in Washington State, which was one of the most competitive markets here in the US. And what did we do there against 1,600 other competitors? We're the #1 edibles manufacturer. We're the #2 producer of flower. We have #2 market share overall in that market. And we did that by highly automating our finished goods, by getting the most out of our cultivation facility. Our yields are 400 grams a square foot, which doesn't mean much to you, potentially, but it's about double the productivity that we think the peer group in the US has out of their cultivation facilities. And so really the thesis is quite simple. We're taking this expertise that we've honed and these brands and expertise and standard operating procedures that we've honed and perfected in Washington State, and we're taking it on the road. And we're putting it into California, Michigan, Massachusetts, Illinois, and potentially soon to be New Jersey. We'll see how that goes next year. But the population that we addressed currently is 76 million people, which is roughly double the Canadian population. When you look at our assets, Washington is our flagship store. We have over 60,000 square feet of flowering canopy, a 40,000 square foot production facility that produces 25 different brands, 300 different types of products. We've taken that into Illinois and our cultivation facility in Illinois, which is one of the best states in the country with 13 million people, just a rip-roaring recreational market. More recently, last summer, we went recreational in Massachusetts, which is also a very productive state here in the U.S. And the early returns from our entrance into the recreational market here have been fantastic. We're also in Michigan, and then as Paul mentioned earlier, we announced earlier in the week that we plan on opening a 185,000 square foot production facility to address the California market. So our asset base is diverse, and we have a very big market to address here. And we're bringing these brands that have already established. We have a full line of flower, gummies, chewies, pre-rolled joints, tinctures, vape pens, whatever you need in the cannabis product, from the whole breadth of products, we have it. And we figured out how to produce it at a very low cost. So why did we win in Washington? We figured out how to wring all the cost out of the production, automate where we can, and really innovate on the product side where we can. And so off of this flagship location, we're delivering to over 260 dispensaries in that state. As I said earlier, #1 producer of edibles, #2 producer of flower. We have basically been a dominant player in one of the toughest cannabis markets in the world. And now what we're doing is we're taking that expertise on the road. We have efficiencies of scale. So we're not buying operators in all these different states and trying to figure out how to fix them. We're iterating on what has worked in Washington. And so as we move into Illinois, we're doing version 2.0 of what has been so effective in Washington. Our facility in California is applying all the lessons of Washington at a much larger scale. And because we have such scale, we're able to get efficiencies on purchasing, packaging, and all those growing and processing methodologies we're able to take across the country. Our leadership team is not a bunch of bankers. We're not a bunch of promoters. I am the only ex-Wall Street guy on the team. This is a leadership team full of operators. Our CEO, Leo Gontmaker, was the architect of all our success in Washington State. Carl Chascano, who is our strategy and operations head, has had, he's an operator in his own right. He has 3 separate exits of healthcare companies to private equity companies. Joe Feltham, our CEO, has been in the cannabis industry for close to 15 years. So this is not a promotional game. This game right now in cannabis is about execution and putting up the numbers. And our operational leadership team, sets us up well to do just that. So we think the sweet spot in the market is finished goods. Yes, selling flower or the plant to people to smoke is an important piece of it, but increasingly, finished goods manufacturing is going to be a bigger piece of the consumer pie. Edibles, vape pens, tinctures, all of those other marijuana infused products are going to be the future. And if you can produce those finished goods at scale and cheaply, you're setting yourself up to win the game. We are focused on long-term brand success of these things, and you can see the automation that we bring to the table with our product development. We have been able to adapt quickly in every state that we're in, and bring new products to market with great speed and agility. Our Chewies line, for instance, we have, caramels. We're able to bring, full line of chocolates, full line of gummy chews, full line of mints. And so we're able to iterate pretty quickly and listen to the market, what the market is asking for. And out of that have become, 20 plus brands that our consumers, that really delight our consumers. Early on in the cannabis industry, there's been very little brand loyalty. What customers were looking for was a quality product at a cheap price. And we gave them that under all of these brands. And all of a sudden, you're starting to see some brand loyalty after being 5 or 6 years in a state like Washington. So these brands that we've established by giving people a quality product at a great price. We have 20 plus, 25 plus brands and 3,800 SKUs. On the flower side of things, we have a good, better, best strategy. Legends is our premium flower brand, our premium strain. Our middle of the road strain is, or I'm sorry, Funky Monkey is our premium strain. Legends is sort of our middle of the road strain, and Mini Buds is our discount strain. And we found that giving folks a good, better, best product mix is a very effective way to attack markets. On the edible side of things, Marmas, which is our gummy square, is the number one selling gummy square in Washington, which we've already ported to Massachusetts and Illinois, along with High Burst, which is our fruit chew, have been incredibly well received in the market. We do vape pens. Crystal Clear is our very consistent vape pen brand. Terp Sticks is our pre-rolled cigarettes brand. So a full line of products and brands that we're able to bring to the market right now. This isn't something that we're saying we're going to do. This is something that we do, and we've proven that we've been successful in incredibly competitive markets. We have a wellness/CBD brand called Pure Ratios. We have a very our CBD patch, which is a 96-hour patch, is sold mostly direct to consumer. We've seen incredible customer response. Folks that have had some sort of pain and aches for years have raved about this product. And so our CBD non-THC brands are being sold across the country as well. And that is a full line of brands as well, from patches to tinctures to roll-ons. Mission is our retail concept. You walk into a Mission store, you are going to see a beautifully laid out store that normalizes the buying experience for customers. Our staff in these stores are friendly, knowledgeable, and have a smile on their face. And the response that we get from the customers really across the board has been that our customer experience is truly phenomenal. And we came out of a culture of a mission to serve. We have a lot of former or advocates, folks who started out in the advocacy world and are on our management team. And we think to push the mission of cannabis legalization forward, you have to normalize the buying experience. And so when a customer walks into the store, you make them feel comfortable, you educate them. And we think that goes a long way towards furthering the cause of cannabis legalization. So our business strategy, again, is really, really simple. We're taking these tried and true brands and products and methodologies from Washington State, and we're putting those into large nascent recreational markets. Illinois, Michigan, California, Massachusetts. We can really replicate this strategy in every single state in which we enter. And I think that we're right in an inflection point in our company. We are a company that just entered the recreational market in Massachusetts. Our management team is laser focused on execution, not just talk. We're a company that went profitable. We started generating profits from operations in the month of August. And we are at an inflection point in our company where, we think that, we're going to see exponential growth in the out years and profitability to go along with it. On the financial side, this is a snapshot of our balance sheet as of the end of Q2. We had cash of 11 million, debt of 91 million. A couple points on this. We recently completed a bought deal for 17.25 million Canadian, which closed earlier this week, actually. And we expect to close a $30 million sale leaseback US of 2 facilities, one in Washington and one in Massachusetts, which will take that debt load down from about 91 million to around 50 million Canadian in the next few weeks here when we close that deal as well. Also, as I mentioned, we turned profitable in the third quarter, or in the month of August, and we fully expect to remain profitable from here on out. So all of our growth plans that we will announce are fully funded, and we expect to remain profitable through, and actually have our profitability grow exponentially as you look into the out years. And this is why we think we're such an undiscovered gem. When you look at some of the bigger players in the industry, Trulieve, Curaleaf, Green Thumb, you'll see that they're trading at multiples of 9 to 12 times enterprise value to sales. 4Front, as we sit here today, is a little under 4 times sales. So not only do we have the opportunity to close that valuation gap, we think that we are going to be on a lot more people's radars as we move into 2021. Not a lot of folks in this industry historically have been very operational focused. And we are, as I said earlier, laser focused on this. And I think as we start to put out results and start to raise our profile in this industry, I think that valuation gap has a very decent chance of closing. And that's really it. I wanted to keep it to fairly short and give you an overview of 4Front and why we think it's such a compelling investment and such a compelling time to invest in the industry. And wanted to leave plenty of time open for questions. So I'll turn it back over to Sophie.
Excellent. So we have quite a few. First off, thank you very much for presenting, Andrew. The question that we have here is, you've focused your operations on selling non-core assets. How does this affect your operational efficiency and cash burn going forward?
So going back to the beginning of the year, we had operations across 9 different states. And down here in the US, there was really a liquidity crunch in terms of US cannabis operators' ability to access capital. And we made 2 big decisions, actually 3 big decisions for our company in the early part of this year. One was, we put the operators in charge of our business. This was not a company that was led from a strategy standpoint. It was a company that was led from an operator standpoint. Secondly, we went from a company that was burning $3 million a month in January to one that achieved profitability in August. And then the third piece, and which is to this question, Sophie, we made the decision internally that we really needed to focus on the states that we thought that we were going to get the most bang for our buck from. And so we decided to focus on, just those five, not just those 5 states. There's a huge addressable market of, close to 80 million people in the states that we serve. And we had, some retail operations in 4 other states that were, some of, Pennsylvania was a good market, Arizona was a good market, but we had retail only. And so divesting some of those allowed us not only to bolster our balance sheet a little bit to get us to profitability, but it also allowed us to focus on the business. And so our strategy right now is to go deeper into these nascent rec states and take sizable market share rather than to be spread a little bit too thin and have a hook in the water everywhere.
Of course. I'm just going to ask this question. Do you have, I believe the answer is no, but do you have an online sales presence or any plans to implement one?
So in the US, about 40% of our sales in the stores are entered online, where a customer will go to our store's website, look at the menu, place their order, and then go into the store to pick it up. What some on the call might not know is that in the US, you can't take product over state lines. So a product with THC in it that's ordered in a state has to be manufactured and delivered in that state. And so we do have an online presence in terms of customers being able to pre-order. The only caveat to that answer is our CBD business, our wellness business called Pure Ratios. You are allowed to send CBD over state lines in the US. Okay. And so that is predominantly a direct-to-consumer internet-only business that does somewhere around $1 million a month. So that is the only true national online ordering where you can sell from a central hub, if you will.
Okay, excellent. Are you planning on going into beverages?
We would. It wouldn't be very difficult for us to go into beverages. It's an interesting market in theory, but as you look at the size of the cannabis market, it's only about 1% beverages right now. Mm-hmm. And so we are currently kind of sticking to, flowers and marijuana infused products outside of beverages. And we could quickly pivot to include beverages in our product offering if we wanted to. But right now, because it's such a small piece of the market, we've not focused on it.
Okay. The CBD that's extracted, is it from cannabis or hemp?
It's hemp-derived CBD
okay.
That we currently sell. And the only caveat there in our CBD wellness business is it's called Pure Ratios is because it was originally the ratio of CBD and THC.
Oh.
And CBD you can send over state lines, THC you can't. And so there are products in Washington, for instance, where we're able to, add THC to those products and manufacture them out of our Washington facility, and the same in Massachusetts. So we are adding THC to some of those wellness brands in the States. But by and large, the CBD that we're selling is hemp derived.
Okay. So with COVID, did you see any major shutdowns, and how did that affect your sales? Did you guys have to change manufacturing processes? Was it state by state?
I think this COVID environment has been absolutely fascinating on which business it affects and which businesses it didn't. In our business, we've seen incredible traffic during this pandemic, which probably isn't that. There's an element of you see alcohol sales go up as well, and you always also see alcohol sales go up during times of economic turmoil, and so that makes sense. But we have been not only seen very robust sales during the pandemic, but we've actually, have been listed as essential services in the states that we operate, which for a person that's been, in the cannabis industry for, 6+ years now, I've been in town meetings where I've been yelled at by 200 people for wanting to open a dispensary in their community. And going from that to being listed as essential service during a pandemic has been mind blowing to me. But COVID, so far has been, you hate to say that a pandemic has been a great thing for the industry, but we've seen very robust, not only seen very robust sales growth, but we've seen, really the manifestation of a public acceptance of cannabis by being listed as an essential service. So it's been a very interesting time. And in terms of, our employees, we're taking, obviously, over the top precautions to protect our employees, in our facilities, but so far so good.
Excellent. So seeing that, there's this acceptance that it became a essential service, what's your opinion on how soon there'll be federal approval for cannabis in the US?
So one of the reasons I think this is an incredibly compelling time to be invested in US cannabis operators is because we are, I think, on an inevitable march towards legalization. But I think the most important domino to fall in that process might fall in the next couple months, and in the form of allowing US operators access to the banking system. And there's some thought that federal banking legalization, for lack of a better term, will be included in the next stimulus bill, for the COVID-related stimulus bill. And we all have our ears to the ground on what may or may not happen, but we think that there's a better than 50-50 shot that banking gets included in that. And what does that mean for US cannabis? It means that your cost of capital comes down because now you can borrow from traditional banks. That means that the first domino falls in terms of US exchanges being able to accept US plant touching cannabis companies. Those two things alone, and then having US institutional money come in and buy, these stocks, and they've been on the sidelines. 4Front is pretty unique in that we have, Putnam Investments is our biggest shareholder, and Putnam saw the opportunity in 4Front, and they've been able to buy. But they're one of the very few large US institutions that's been able to participate. And so as that money starts to come into the industry and wants exposure to this cannabis legalization trend, I think that provides a pretty nice tailwind for this industry and for investors.
Well, that brings me actually to my next question. Can you touch on the main shareholders and how much management owns?
So it's so our main shareholders, our biggest outside shareholder is Putnam Investments. And one of the most compelling things about 4Front is that how aligned management is with the shareholders. Insiders own somewhere around 47% of the company. And we are not taking big paydays, and we have put our own skin in the game, and we have been building this company from the ground up for 6+ years. And so we are incredibly aligned with the shareholders, and friends, family, who supported us through the early days of this. We're all just in the same canoe together, and I think that should bring people a lot of comfort.
Excellent. Paul, did you have a question or two for Andrew?
Just a couple. One of your slides showed that you had 560 million shares outstanding. And I'm looking at the website and I'm looking at other places, and it only shows you got like 126, 128 million.
Yeah, we had a compressed share structure. And so the unfortunate part when we try to correct that on some websites, they say, well, so as you convert your insider shares to subordinated shares, which are the ones that actually trade on this exchange, you get an 8-to-1 conversion. And so we've tried to fix that on some of the websites, so we're very clear with investors on how many shares there are outstanding. But you're exactly right, Paul. You know, the number of shares out, the way we describe it is kind of 560 million. And that's kind of that's the share count I use and that investors should use as the rule of thumb.
Okay. And one other question, you've got warrants that are listed. They have a strike price of 90 cents and they have a 2-year term.
That's correct. Then they just started trading, I think, yesterday.
Yeah, that's a good vehicle for people to look at if they want to, you know, they've got 2 years, a little bit cheaper than buying the stock. A couple of other questions. Do you have shelf space on any other stores within the state, like other competition stores, or are you unique to yourselves?
So in Washington, you can't be both a retailer and a wholesaler. So we are just a wholesaler in Washington, and we distribute to 260 plus stores on any given month. And in the other states, in Massachusetts and Illinois, we are currently selling everything that we can produce. And so we have currently underway expansion projects in both of those states, Massachusetts and Illinois, where, you know, we plan to, you know, become wholesalers outside of our network as well. So that is all on the come, Paul. But currently we're sort of selling everything that we can produce out of our own stores right now.
Okay. Are all your stores, like, you own them, or any of them franchised, or?
Yes, we making sure. Yeah, we own all of them. Some of the assets that we sold earlier in the year, we were involved with them through managed service agreements where we'd go in and we'd effectively manage the store for that license holder and take, you know, a big swath of the economics. But our current store base, we own.
And I have one last question. Your earnings are due to come out, do believe on the 30th, correct?
Monday night.
Okay, so
Monday night.
Want people to look forward to that. So
Yes.
And you can't speak about that at all, right?
No, sir.
That's fine.
But I would encourage people to tune in.
That's what we're going to do. That's why we'll make sure that everybody gets, gets a link to the earnings. Now, is there any other questions that you had, Sophie?
No, that was it, Paul.
All right. What I think we're pretty, Andrew, this is a great story. I think being in the US, especially right now with the change of government down there, I think you've got nothing but, open space in front of you.
I was a former professional investor myself, so I'm not overly promotional, but, when you look at how, the Canadian market unfolded when, you legalized down up there, I think that we, could very well see a redux of that here in the US, and it could start, as early as the coming months with the approval of banking. So, we have definitely hit that tipping point in terms of public acceptance, listed as an essential service during a pandemic. It feels like the genie is out of the bottle. So
yeah, that's what I'm thinking. It's just a matter of time when they exactly execute it and put it through.
That's right. And so, investors, I'd encourage folks to sort of look beyond, kind of the big four that have the high multiples and see who else out there can operate and who else has a good footprint in a big addressable market. And I would suggest that, we fit that bill pretty cleanly, and we need to execute, but the setup looks terrific.
These are pretty trying times, and you guys are managing well through all this. Maybe it's time for people to try some funky monkey. And with everything that's been happening in the US, it's nice to see a change coming, and I think that you guys will do well in the future. So, Andrew, thank you very much for your time. Much appreciated.
Much appreciated. Thank you very much.
All right, take care, everyone.
Okay.
Okay.